All right, let's take a look at a couple trades on the day today that we're looking at putting on. Thought I'd share some trade ideas with you. So let's get into 3 different trades. Before we do that, let's just look at where SPY ended up the day. Today, we ended down at $1.77 on SPY, 19.51 on SPX, coming down into this previous area of resistance that we broke through back here on the 9th, broke above the 3 ATR, and then came back down into here today. So let's see if this holds or if we break through it. We're right now sitting at 3 different areas on the SPY on the daily here. We are looking at the 618 fib of the overall downtrend that we broke through to the upside. So it was a little bit of a resistance area and support. It also happens to be the 21 EMA, and it also happens to be this particular area now of resistance, which is now potentially an area of support as it flips over. So let's see if we can hold this 430 mark on SPY and get a little bit of a bounce off of that. It looked like we were getting a bounce early and then sold off into the day today. On the daily, MACD firing below the 0 line, selling off. You can see the TTM squeeze just been losing momentum for 4 straight sessions here, and stochastic momentum just heading down into an oversold territory. So might be lining up for something. We'll see there. And if we look over here on the weekly, we definitely have a tip over on the stochastic momentum, and the MACD squeeze still firing to the upside. So we're going to see where things go. And here we have this still a little short-term uptrend, but we've been up, down, up, pulled back, and then a big up. And then if we pull back anyway, even to the 420 range or so would not be the worst thing in the world for the market. I do want to take a quick look at IWM here today. We did rise up into this resistance area, and IWM did fail. Here you can see just not enough to get through there as MACD tipped over and is now firing negative through the 0 line. Squeeze momentum coming back out of this trade, but we are heading down into an oversold area here. Looks a little bit worse over here on the weekly. We've just been in this range, couldn't get through there as we mentioned, but we do have some bullishness on the PSAR and the squeeze, but a little bearishness on MACD and the STOMO. So some very mixed signals on IWM as it just meanders in here. It's really in a great place for a strangle. I think you could see us go a little bit lower, or it could bounce off the 50 EMA here and move its way higher as it just sticks in here. So we'll keep an eye on IWM. What I want to take a look at as well today is let's take a look at some of the futures trades. And I want to focus on a couple here, some trades we want to put on. So the first one up are live cattle. So let's take a look at live cattle, LE here. And you can see this thing has just been in a great uptrend in this channel. And we're just a little bit over the center of this channel. I only put this regression channel on here just to take a look at where we were on the channel. So we have pulled back a bit in here. Some mixed signals. Squeeze kind of hanging in there. MACD just flat. Stochastic momentum coming out a bit, but it doesn't mean it can't curve and head higher on the weekly. And then if we look over here on the daily, we had this PSAR reversal back here on the 9th. We've been in this nice little pullback to the 21 EMA, but now it seems to be holding right on that 21. So let's see if we can get a bounce off of that. We'll remove the channel on this just to make it a little bit clearer. MACD might be reversing higher. Squeeze firing a little bit lower, but the stochastic momentum is starting to rise. So we could see another leg higher on the live cattle trade. So what's our trade on this? Let's take a look at what we're doing and what we would do today. So we're going to go with a strangle on this particular trade. And we're going to go out to around 90 DTE. We don't have one, so I'm going to pick the 102 DTE for the strangle. Now, my normal strangle would be to sell the 7 delta puts and sell the 6 delta calls in here. So that's what we would normally be looking at for a strangle. Still not bad here with the multiplier that we have on with hog. So we're going to take in around $310. Again, we have a 400 multiplier on live cattle, and we're only using a buying power of about 1,093. So it's a pretty good ratio. However, I think when we look at the chart, 157 and 196, 157 puts us down here. That's pretty good. 196 is up. So, I mean, I think we're probably in good shape to stay something around in there. So I think we're below the 3 ATR. We're below the 200 EMA. We're well above the 3 ATR up to the upside, and we're sitting dead center between the 3 ATR upper and lower. So I think a strangle here would be a good play on this one. So this is something we would be looking at, the 157, 196, something in that range. I already have one on, but that would be a new good possible trade in here. And again, taking in a $310 per contract, and do as many contracts as your buying power will allow you to do. I would probably look at something that would give us at a 2x loss would be no more than 2% of the account. So right now, I would say for me, putting on about 8 contracts, taking in $2,480 on $8,700, we'll look to take profits on this thing around $1,200 or 50% or a 2x loss. So there's the live cattle trade that we're looking to put on today. So there's one. The next trade we're going to take a look at is nat gas. So something a little bit different for everybody here is nat gas. So let's get into this. Now, nat gas came down hard from late August of last year all the way down to this 2 range, dropping as low as a buck 946 on this, and it's just meandered in this range since really, I don't know, February of this year. You had a little bump to 3 and then just moving back, but now you're starting to build this base and a nice kind of a cut base here. But look at on the daily, you're just this long base. But lately, we're just starting to move our way up. And we had some resistance up in here around the $2.60, $2.65, something along that line. We broke out back on the 23rd. Today, a little bit more of a breakout, hitting the top of that 3 ATR, and it couldn't quite make it too much farther than that. But squeeze is firing. MACD and RSI are climbing. Stochastic momentum, very bullish and climbing. And then if we look over here on the weekly, we've had a real big weekly move higher, and we're in a squeeze. So we could see up or down, we could see a pretty significant move. Right now, it looks like the move would be to the upside in nat gas. So how do we want to play that? Now, nat gas, they call it the widowmaker, and maybe for good reason. But let's take a look at nat gas. We're not in that crossover time from March to April, so a little less stressful. But let's take a look at potentially some different trade opportunities. And we're going to go out and we're going to do a 1-1-2 trade here. And for those, I stick around 60 days. Except for the LT 112s that I do on ES, but most standard 112s for me, about 60 days. So let's go in here and let's just construct a trade. You can see I've already got something working here. I would take a look normally around the 25 delta on the long, and probably go 2 strikes on this one. And we'll construct and we'll show how we play around with this a little bit, and somewhere around the 5 delta on the 2 naked puts. So we've got this 244, 236 put debit spread, and then we would finance it with 2 of the $1.70 calls. Let's take a look at how this thing is going to look for us. So taking a look at this particular trade, here's what we're looking at on this one. So let's see, does this make sense with our criteria on nat gas? So let's take a look where we are. Normally, we want to catch at least for me, I want to get at least 6% on my buying power in 60 days to be in this tail. So we're taking in $240 on this trade. And again, when you trade nat gas, okay, this thing has a 10,000 multiplier. Okay, so it can move pretty significantly here, so you got to be a little bit careful on nat gas. But I'm looking at 60 days out. So I'm taking in $240 because I'm taking in 0.024 times 10,000 on buying power of 4,860. Okay, which gives us a roughly 5% return in 60 days. I really need a little bit more than that, so I might want to pull up this put here just a tad more. So let's see, where were we? We were about 1.7. Let's see what we need to move it up to here to get a little bit higher. We might want to move it up to about 1.8. So this gives us 0.038, which is $380 in the tail. So I'm taking in 380 and buying power of 57.94, which is a 6.6% return on capital. So that's what I like to see here. And then in the trap, I'm getting usually 4 times that, not quite here, maybe 3 times the size. So I think this is a good 1-1-2 on futures trade, unlimited upside, and then downside all the way to a $1.79, which would be below the support that we saw down here and the low of the year. So if this thing rallies harder, we're all good. No upside problems for us. And if we happen to drop back down here a little bit more, we really have to do some work. We got to break this previous resistance, which is now flipped to support. We've got to break the 21 EMA. We've got to break the 50 EMA. We've got to break this uptrend. We got to break the PSAR reversal signal. And then we've also got to break the 50 EMA way down here at about $1.98 or so. So there's a lot to chop through to get down here. So I think we'll be good with this trade on. So there's a 1-1-2 potential in nat gas futures. Last trade I want to take a look at today is corn. Corn's had a bit of a run lately, and the main reason for this corn is the severe drought conditions, northern Illinois, Iowa. So we've got drought conditions, little spotty rain the last day or two. Maybe that's helped out a bit and dropped those prices back down in here. But we are still in this uptrend. We came right down, touched the 21 EMA today, bounced off of it. We couldn't break above this 200 EMA, and we still have this downtrend that we're fighting with here. So we're getting into this kind of triangle area. It's not a perfect triangle, but we'll see what happens in here as we've moved up. We've pulled back to the 21 EMA. Will that just allow us to bounce and continue to move higher on corn? When I look at the MACD, it's selling off a bit. We're losing momentum, MACD, squeeze, and stochastic momentum. So we are losing some momentum on corn. Where can we drop in? We're a little bit, to the top side of, this move. So pulling back is not the worst thing on corn futures here. So considering we could bounce off this 21 and move higher, and also considering that maybe there's some weakness here, we also triggered a PSAR reversal signal on this move as well. So we have some downside. A strangle is a good possibility on corn, but considering where we are, I think I'm going to look to do another 1-1-2 trade. So let's jump into the platform and take a look at corn futures. All right, so corn futures, we're going to do the same thing. Let's put on a 1-1-2 trade. We're going to go out 60 days on that. I'm going to pick something around that 25 delta. Looks like there's a trade sitting here. We're going to just piggyback on this one for an example for you. So we're going to do the 5 wide, put debit spread here, and then I'm going to go down here to the 465, and that's where I'm going to put on these trades on the naked puts on here. So let's take a look and see what this thing looks like. And here's what this trade, oops, Didn't mean to move that around. I think 535. So here's what this trade's looking like right now as we move in. Just have to fit this thing on the screen. Tasty works a little bit crazy. All right, so we're taking in $2 and $8.75 here on the credit on corn, which gives us an $881 overall credit on $4,561 here. So this is a little much. I mean, that's a 19%. So I think I would be happier. What's going on here? Let's take a look. You know why? It's because we got other trades mixed in. That's why. All right, so let's take a little bit better look at this particular trade in here. This makes a little bit more sense. Sorry, I had other trades mixed in on this particular one. So we're taking in $1.44 credit. Okay, and we're using 4,561 here. So that's not giving us a whole lot of return in 60 days. It's only about 3%. So I'd probably want to move this naked put up a bit and push the profit on this particular trade in here a bit. So maybe moving this up to about 480 or so. We're now taking in $256 on 5,126, closer to 5%. So somewhere in this range, I think, is where we want to be on corn here. You could also maybe move this up just a tad more on it. Futures market's closed right now, so it's hard to get a good reading on what this would look like. But this is exactly how we look to put on these trades. Am I getting 6% in the tail, which is 3% a month over 60 days? Do I have enough downside protection? 480. How's that 480 going to look? 480 puts us way below any of the support levels that we have here. So we could definitely be moving that area up a little bit more as we go, taking a little bit more return. And maybe we also look to, move strikes around here. It's maybe a little bit better. We could get a little wider on this one as well. So lots of things we can play with on corn, but I do like the shape of this thing. We don't have to have a giant trap on it. We'll see how things shake out on this corn trade. All right, so there's how we're constructing this. You can move them around, take a look. We'll wait till the market opens tomorrow. We'll see where things are, and we'll see if we can put this trade on. All right, hope this was helpful for you, and enjoy a great rest of your day. And we'll see everybody in the Discord channels or on Twitter or here on YouTube tomorrow. If you like this video, go ahead and click the like button. Go ahead and subscribe. We'd love to have you here. Ask questions and comments. I try to get to as many as I can. Have a great rest of your day, everybody.